Hey guys, I'm Matt Faircloth. How y'all doing? Cool. What I want to talk to you guys about is about raising money. Hey guys, I'm Matt Faircloth. How y'all doing? Cool. What I want to talk to you guys about is about raising money. You need money to do deals. If the economy is changing, there's going to be deals that are going to come up in the new economy, in the whatever, in the future. My crystal ball is broken, so I'm not sure what tomorrow is going to bring. And so you guys need to learn the tools of raising money so that you can do more deals, take on more opportunities, grow your business. Whatever it is, you guys are going to need money, and it doesn't have to all be yours. I have plenty of money, but I also raise plenty of money from other people too. There is a belief that I have that raising capital from those in our own network is a way to share in what we do with others. By the way, what's the stock market going to do tomorrow? I don't know. I don't know. But I'll tell you, my tenants will likely pay their rent. We can offer what we do as real estate investors to a lot of the people in our network. So today's conversation is not about how to go to raise money from people you don't know.com. A lot of today's conversation is going to be about raising a lot of money from people that you already know. Who makes it a little uncomfortable right now talking to people they know about money? That's okay, because you care about those people. You want to see them do right. But if you run a good business, understand, they need you. They're not doing you a favor. There's a lot of things that we can help them do they cannot do. The stock market doesn't give tax write-offs. We can. Stock market doesn't give negative K1s. We can. There's a lot of things we can give them as real estate investors. So look at it that way. This is a deal that my company closed in 2015. That's called the Lofts at Savoy. That's all the way out in Elizabethtown, Pennsylvania. That was our very first deal that we did. We got started as a Trenton landlording company. It was a grind. We raised $1 million. It took us 3 months to raise the money. It was before the lovely light of Bigger Pockets was shining on me. So this was all like family, friends. My mama's in that deal. I still own that property, by the way. Transition to, that's a deal we closed in 2021. And by using a lot of the technology and the methods that I'm going to teach y'all today, we were able to raise $4.8 million in 2 weeks on that deal. And that's a 156-unit apartment complex in Lexington, Kentucky. There's another complex deal that we closed in March of this year, 670-unit portfolio consisting of 5 apartment buildings. And we did that deal and raised $21.5 million in 2 months. You could look at that and be like, oh, that's because he's the Bigger Pockets guy. It's very little of that. Most of this was referrals from these people and folks that have heard about us and kind of raised as we raised our flag and everything like that. You don't need a megaphone like Bigger Pockets has to do this. It's helpful, but you don't need it, okay? So you guys clear. So the conversation I'm going to go over with you guys is going to be assuming that you guys have a deal in place. You go under contract on day one. This is like under contract ground zero, right? And the point of it is in 90 days how to raise a significant amount of money, because most reasonable sized real estate transactions you can extend out. So 90 days is a reasonable amount of time. The biggest mistake people make when raising capital is that they build your investor base. You're supposed to build your investor base first. They raise capital before they have a deal. If you start raising capital when you have the deal, you lose. My book talks a lot about how to build that investor base, but straight up, here's a few tips. Talk about what you do with people. And although a lot of you guys may have extremely awesome, viable professions, ask them what they do, and they'll ask you what you do, and tell them you're a real estate investor. That's an easy tip number one. Second, if you're going to post on social, just post about real estate. It doesn't have to be about deals you're not doing. It doesn't have to be about anything, like any kind of BS. Just talk about real estate and how amazing real estate is, the benefits real estate has, and people will eventually realize, hey, that person's investing in real estate. I maybe should call them about real estate investing. The third thing you want to do is start a newsletter. And even if you're not doing a bunch of deals, that's okay. Start a newsletter, send it to your mom and your dad and your next door neighbor and the person you know from church and the guy in your bowling league and the guy from work. And some of those people that I used to work for years and years ago now invest with me. You know why? Because they know I invest in real estate, right? So start some sort of a communication with people. You're not going to raise $1 million at all from anybody if you don't have a base of investors you can go to when you do have an opportunity. By the way, this is all assuming you guys are raising equity. But it's important to understand what debt and equity are and where the SEC gets involved and where they don't. The SEC is an organization that you don't want to be dealing with, and so it's better to just register what you're doing with them. It stands for Securities and Exchange Commission, and if you're going to be selling equity, which is a security to somebody, but the most common ones are 506B, 506C. 506B is B for buddy. That's the way you remember it, okay? So these are people you know that you already have a pre-existing relationship with. If I get to know Anthony's real estate investing goals and have a call with him and I document my call or I record it and I put it in an archive or whatever, then that's what is deemed to be a pre-existing relationship. The SEC intentionally doesn't have any definition. All they say is it has to be a substantive pre-existing relationship. In your own mind, make sure that you talk to people that are going to be investing with you if you want to do a 506B. Now, why would you want to do that? I'll tell you why. Because you can take non-accredited investors in your deal. Accredited means they have a net worth of over $1 million, not including their house. Non-accredited investors in your deal, if you do just your friends and family and people you meet and people you have a pre-existing relationship with. That's the way we got started. And that's the way a lot of people get started now is you can go to your existing network and raise money and they don't have to be accredited. You could also go 506C, which means accredited only, but you can solicit. That means I can put up a billboard that says I'm raising money. I can do a Facebook ad, which we do. I can do a YouTube ad, which we do. LinkedIn works really well. 506C is what you want to do if you want to really broadcast the deal that you have. The way that we do it at Derosa is we do 506C for really, really big stuff, and that builds our database for non-accredited investors. Because what happens? So people see the ads, and people see the advertisements that we do, and not all of them are accredited. Advertise, 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 and then do a smaller deal. So you got to decide what you want to do. The reason why you decide that out of the gate early is because it's really hard for you to start passing a hat around to investors if you well, can I solicit? Can I not? So this is one of the very, very first things you do once you're under contract. Maybe when you kind of have your business plan together for offers you're going to make, you decide which way you want to go with this, right? Property management is what you have to have in place earlier than you think you do. Before you make an offer, we always add amenities on our deals. This deal, we did 2 grilling stations, we did a playground. Even if you've got a smaller, like if you buy a 10-unit apartment building, right? You can still find some sort of a tenant amenity, something that's going to make the property sticky, something they're going to like that they're not going to want to leave because they might not get somewhere else. So you're starting to put together a marketing deck. And this is just a standard PowerPoint presentation. You're going to start assembling this, which is like probably a 30-page or so marketing deck that you're going to show investors. Now, I've sat down over a kitchen table and gone through it with people in that, but there's other ways you can broadcast this stuff out to a lot. But you're going to start in the first 30 days putting in the content and the data that has to go into this marketing material. Because the way you can raise a lot of money from a lot of people is to put your best foot forward and tell the story of the deal in like a little presentation. Like, I like to do teaser campaigns and it's kind of like a jerk move to do to tease people, but it works, it creates a frenzy. And so what we do when we have a deal, we'll do a webinar for the deal and we will start to do email campaigns. I email every other day saying like, hey, we got a deal. Hey, we're excited about a deal. And we'll let out one new thing each day about the deal. We're going to give you a 17% rate of return. We got another deal in Kentucky. We got another deal in North Carolina. Value add opportunity, whatever it may be. Non-accrediteds, whatever it is you want to put out to your investors. And I know it's kind of like marketing and hokey, but guess what? It works. It gets a level of frenzy around your deal. Because the reason why you want a lot of people in your webinar, you want to do one webinar and be funded if you've got a reasonable investor base. So the way you get lots and lots of people on the webinar is by doing a bit of a teaser campaign. You're also letting people know, hey, by the way, if you can't make it, sign up for the webinar anyway because I'm going to send you the recording. Right? Make sure they're clear that they don't have to be there on the webinar to get a copy of the material.